All right. So one of the things we normally do at the end, a little bit of predictions. I think we've hit some good stuff. Brian's has some incredible insight. We just, again, part of the prediction thing is just, putting things out there and showing that, you may know some things, but you may not know exactly where it goes. So last roundtable, Jason, more volatility, little mean reversion. So I think we probably have had that.
We get a VIX spike?
We got the VIX spike.
Okay.
I was thinking about it later, pulling up charts for the clients on the VIX. I might lose them, but yeah, we did see a spike in volatility, and usually, at least historically, that's been a buying opportunity when you see a VIX above 40. And we had a dramatic spike where, and Brian, I don't know if you can see this, but you're familiar with these numbers, where we saw the VIX jump from 16 to 40 nearly overnight, and then it gave it all back, and then now we're back. I think the VIX is now lower, which for those listening, the VIX is just a volatility measurement that we monitor to just kind of see. Oh, Brian could answer this better, but it's basically tracking the protection via options that those are looking or anticipating a downside or volatility in the markets. And so this monitors that. And then we actually had the fastest drop in the VIX in the last 30 years. Maybe 20 years now that I'm looking at that data, but nonetheless a big drop. And then when I tracked too how the markets reacted when the VIX drops as much as it does, I've got a chart here on performance going forward, and now for the next, at least historically, when we see movements in the VIX like this, the next 90 days are a toss up, but that's to be expected. But it's batting 1,000 when you look 12 months out. So going back to Brian's prediction of where the markets might be a year from now, this would echo that.
Well, that makes sense too, because we also referred to the VIX as kind of that fear index, right? And so clients in panic and reaction to markets and news creates more volatility. And if it becomes more normal, you get more cash and stuff coming in from the sidelines, and markets tend to react positively.
Right. Kyle, you said mortgage rates would be down. Value. Man. Kyle's just stuck with the value.
On this table. Kyle's all about value. Well, like I said, I think I've said that value prediction for 2 or 3 podcasts in a row, so I was never wrong. I was just early, right? So finally, we did have the value kind of outperform growth, and that's from the kind of that end of our May podcast. And now, if we were cherry picking some of those periods of time over the last 2 or 3 months, there was some significant outperformance for value, but right now it's about a percentage point. So nothing overly significant relative to how much better growth outperformed value over the last few years. But at least it's showing that, as we talked about a lot, that it is more of a broad market participation now, and not just kind of those growth positions. So, and yeah, mortgage rates. Yeah, I think we talked about it. It was not long ago. It was at that 7.75 number and come down about a point, it looks like here. So, yeah. Guess I got that one right.
Yeah, and Brian had a good answer on that. Just with the whole, mortgage rates, you probably should expect mortgage rates to continue to come down just because of, like you said, price stability. Mm-hmm. It's bank risk, and if they don't know where inflation's going and what their risk is, then you're going to get a bigger spread on mortgage rates over the 10-year. And now that's starting to come down, and the 10-year hasn't changed a whole lot. Chris, more M&A activity in tech. Did we have more M&A activity in tech?
That was awfully specific.
It was really specific. How do you measure that? You get more. Do you have anything on M&A, Brian? as far as M&A in tech? No, I think my point there was, I think with inflated numbers, you take the top tech names, they have money to spend.
Cash.
They have cash.
Doing buybacks.
They have cash, and that's what they're doing with it. They're buying their own stuff.
Yeah,
but they're not
M&A within.
Yes, but yeah, I my guess is they'll probably do more of that because they still have cash. They have record amounts of cash, and the currency, as far as the stock goes, is still way up. It's higher than it was before. So, we'll see where that goes.
Yeah, and then I've been staying with the no rate cuts in 2024, and now it looks like that run's going to come to an end, but. The whole point there was that again the Fed is it seems to be moving slower than they used to move based on historical. It would throw out a token 25 here and there, and again they're stuck on that inflation number. They still haven't cut rates. Now Brian has said he expects them to. I think now we have 6 rate cuts priced in. Is it 6 or 4? A full percent.
Yeah,
a full percent priced in by the end of the year. So we'll see what happens. We probably won't get no rate cuts in 2024, but I wouldn't be surprised. So I'll start with next predictions. I wouldn't be surprised if we only get 2. And one would be extreme, but it just seems that they're just very, very hesitant. And I think it all comes back to inflation, and they feel like the economy is, doing well. And as we just talked about with Brian, that hey, it's 18 months out. So you wait a little long, and then you can't get that time back. So it'll be interesting. But I think maybe
I'll
2.
add to that too, because my prediction was going to be that we don't get a full percentage point by the end of the year. I do think that 50 to even 75 is probably baked in now, but I think that full percentage point, because they only meet 3 more times, and so I think
we only
that's
have 3 more meetings.
Seems like
so I
market
think that would be
optimism.
pretty aggressive. So,
Jason, come on, you're 1 for 1. You hit last time.
Yeah, right. What I've seen here, I think there's going to be more. I forget the term Brian used, but kind of like a broadening out in the market. The first half of the year was all tech, and now what we're starting to see. I'll leave specific names and ticker symbols out of this podcast,
Please.
But what we're starting to see with some of these earnings, most recently one that came out yesterday, is this is a company that many would say is priced for perfection, and trading at all-time highs. And they actually beat on every metric on their earnings, and the stock was still down, showing just how priced to perfection a lot of these companies are. Like, they have to keep batting perfect, grand slam after grand slam, and that's not sustainable. And so I would expect that we start to see some broadening out, where maybe people are starting to take a little bit of money off the table with some of these tech names, and we start to see some of the other companies have their day in the sun. So I could see
that a value prediction?
Yeah, that's it's a
sector rotation.
I would say it's more of like
sector rotation.
equal weight catching up to weighted.
Well, and the growth rate thing too, we've talked about this. It's a math problem. Growth rate is not sustainable forever.
Right.
You have at some point it gets
you can't keep growing.
You can't keep
at 100%
up at the same
every quarter.
percentage. Exactly. So that by definition, eventually that does come down.
Yeah.
Chris,
I have nothing.
you got
I have
nothing.
to add.
All right, we'll toss it to Brian. Brian, any predictions next? Call it next 3 to 6 months.
The election will pass without incident.
That's probably a pretty safe one.
The Fed, I agree, the Fed will not do the 4 rate cuts this year, and economy will slow but not go into recession.
I like it.
Perfect. It's good news for clients.
That's pretty optimistic. I like it.
Well, listen, we really appreciate Brian being on. I mean, if you listen to this whole thing, it's incredible insight, and he's an expert, but it kind of backs up a lot of the things that we say all the time, that nothing is ever as bad as it seems. A lot of this is a lot of the news is designed to elicit emotional reaction and drive fear, and it's a much more complex organism than boiling down to 1 or 2 things. So thought it was great.
Yeah, really appreciate your time.
Awesome.
Thank you.
Thank you, Brian.
Thank you very much,
Let me
Brian.
remind everybody, so reach out to us with questions. We wouldn't always have Brian on here, unfortunately, but we'll be able to answer some questions on the podcast. Follow us on Facebook, LinkedIn, YouTube, or at our website at strongvalley.com, where everything's on there. And please share with somebody you think might benefit, or just like to laugh at us a little bit. I would say this one probably benefit. Brian's got some great information, and you don't have to wait for him to be on CNBC. You can listen to the whole thing right here. Perfect. So great time. We'll do this again in a couple of months for our last roundtable of the year. Appreciate it, everybody.
That's good.
Thank you all.
Thanks, guys.
Thank you.